Good morning. Welcome to Midweek Business on Business Morning here on Channels Television. I'm Amy John Mekwa. We do have a lot to talk about today, but a countdown continues. It's 13 days before the expiration of the old Naira notes. The Central Bank of Nigeria had asked that all old notes be deposited at the banks before the 31st of January. And remember, here on Business Morning, we welcome your new Naira experience. Send us a mail at businessmorning@channelstv.com. Your new Naira experience is 13 days left. You need to deposit that old notes with you to the banks to get new notes. Hopefully, you'll be able to get those new notes because, of course, information are out there. It's not so much in circulation. But do your own part. Get to the banks. Try to deposit your old notes in exchange for new ones. And then before the expiration, which is in 13 days. And remember to share with us your new Naira note experience. Send a mail to us, businessmorning@channelstv.com. Businessmorning@channelstv.com. Share with us your new Naira note experience. All right, so there's inflation in the country. It tapered. That's what we have. That's what was released about 2 days ago by the NBS. And still on that, eased inflation in Nigeria. On the backdrop of the MPC, which is next week, is it going to affect their decision? Is it affecting investors? And this easing of inflation is the first time in 11 months. It's now at 21.34 from 21.47. Well, let's delve into this and see how this is having effect so far. To join us for that conversation this morning is Dr. Joshua Banfo joining us from Ikoyi. Dr. Banfo is from Anderson, and he joins us to discuss this. Good morning, Dr. Banfo. Thank you so much for your time.
Good morning, Amy, for having me.
Yeah. So this tapering of inflation, is it for real? Is it sustainable?
Yeah. So for us to be able to answer that question, we really need to look back at where we came from and what could possibly have led to the tapering of the inflation at the time that we expected it to rise, which was the festive period in December. We started the year 2022, January, from an inflation rate of about 15.60, and it steadily increased over the course of the year and hit a peak of 21.47 in November. So that had been the biggest concern for the Central Bank of Nigeria, that is how to actually rein in the inflation rate. Bear in mind, at the same time, they also have to deal with unemployment issues, and the only way you can deal with unemployment is to expand or grow the economy. And the economic growth rate has not been too successful. If you look at the Q3 result, it was around 2.5% growth rate. So inflation has always been the concern. Now the expectation would be that in December, where we have the festive period, there's going to be a lot of demand for goods and services, and the inflation rate would have gone up. But interestingly, it actually went down from 21.47 in November to 21.34 in December. And that has been some form of relief for the Central Bank of Nigeria. And that is the reason why people are skeptical as to whether the Central Bank of Nigeria will continue its contractionary monetary policy of increasing the monetary policy rate now, which is around 16.5, or is it going to hold it at 16.5 and now refocus on having expansionary monetary policy that would lead to higher economic growth. But what has been interesting is the reasons for the tapering off in December. One of the issues that have come up, or one of the causes that has come up, is the fact that we did experience, some slight appreciation of the Naira against the USD in December compared to November. I think in November, on the average, the Naira against the dollar was around 807 Naira to a dollar, whereas in December, it was around 745. And that slight appreciation meant that, we kind of brought down the imported inflation, which actually helped. The other argument that has been put out there, which we shouldn't be too excited about, is what we call the base effect. In other words, if you look at December of 2021, inflation was high. That means average prices was already high. So if the base effect, or the base that you are comparing with is already high, then the probability that the inflation rate will not be as high as the previous month, exists. And that is just a statistical issue and not something that we need to be too excited for.
All right. So
another way to look at it is to look at, another way to look at it is
the MPC is next week. By Tuesday, we expect to get the committee's decision. Do you see them getting less aggressive about the hikes and interest rates now that we see this tapering of the inflation number?
Yeah, I think a number of economists believe that they are going to hold the monetary policy rate at 16.5, as opposed to the initial expectation of increasing it by, to let's say, by some 50 basis points. So we are yet to see. But if they do hold it, then what they are trying to signal to the investment community is that this tapering off of the inflation rate is something that is going to be sustained going into 2023. So that will be the signaling effect. But should they increase it, then there's a recognition that this could be a one-off issue and the inflation rate challenge has not been dealt with fully. And that could be a concern, because if really they believe that it's a base effect, a statistical issue, then there might be the need to continue to increase the monetary policy rate. However, if they believe that, look, we are going to be able to actually deal with the exchange rate issues, potentially in 2023, there could be a convergence of the power market rate and that of the official rate. Then maybe they will then hold it at 16.5, knowing that they are gradually getting the results of implementing this contractional monetary policy over a period of time.
All right, Dr. Banfo, we just have to hold it right there, because we're going to have this conversation again next week when the MPC meets. They start their meeting on Monday, conclude on Tuesday, and we get to hear their decision on Tuesday and see which way they go. But thank you so much, partner and head at Transfer Pricing Services and Economic Advisory Services with Anderson, Dr. Joshua Banfo. Thank you for your time this morning.
Thank you very much, Ini. I appreciate it.
So back to that issue with the Naira. Will Ibong got out to the streets and the banks to find out if really the new Naira is circulating, and she filed in this report.
It's about 2 weeks to the expiration of the old Naira notes. Although the central bank had asked banks to stop dispensing old notes with effect on Friday, January the 13th, or face a penalty, customers are still unable to withdraw the new Naira notes over the counter, that is, in banking halls.
I came into the bank just to get the new Naira notes, and I couldn't get it off the counter.
A senior bank official confided in Channels Television that the amount of new Naira notes supplied to some banks to be distributed among their local branches was within the range of 40 to 50 million Naira. This may explain why some ATMs are still dispensing a mix of new and old notes.
I dispensed only once, the new notes, the new Naira notes. I withdrew 10,000 Naira. Then after the first withdrawal, I wanted to withdraw the second one. The machine refused to pay, temporarily unable to dispense cash.
While some Nigerians are now able to access the new Naira on ATMs and spend such, others remain skeptic.
Well, I had an experience some days back. Well, I wanted to spend the new notes, and the person was like, I don't know this money. I said, okay, Mama, no vex. I gave her the good note. So I think a lot of persons are not even aware that we have new notes in the country.
I'm collecting it now, and it's fine. And some of them, they are complaining about the new notes, that maybe they are not preparing the new notes, they prefer the old one.
With an improvement in acceptance, some still question the adequate supply of the new notes.
So far, it's not rather circulated, as far as I know.
It's last week that I saw only 500 Naira. Somebody used to buy something from me. So ever since then, I've not seen the new Naira notes.
Meanwhile, the Apex Bank maintains there will be no shift in the deadline and has asked Nigerians to deposit their old notes by January the 31st. Will Ibong, Channels Television News.
All right. so don't forget to share with us your new Naira Note experience. Send it to businessmorning@channelstv.com. Have you been able to get the new notes when you used the ATM last, or was it over the counter? Share that with us. Well, there's also another important issue. On Sunday, it was reported that power generation dipped to 916 megawatts, with only 2 out of about 24 power plants in operation. The decline in generation was from 3,787.60 megawatts that 17 power plants produced at about 1 p.m. on that day. Meanwhile, Association of Power Generation Companies attributed the decline in production to grid disturbance. The unending conversation of electricity generation and distribution in Nigeria, it seems we will always have something to talk about. That's why we have Mr. George Etomi in the studio, the chairman, West Power and Gas. Good morning, Mr. Etomi. Thank you so much. We tried to have this conversation virtually 2 weeks ago, and we couldn't conclude because of network. So it's good to have you in the studio.
Thank you. It's my pleasure to be here.
So before we go into power, no, okay, you guys are the big guys, so you have the new notes everywhere, I guess.
I think this new notes business is a leveler. I don't even know the big people who have the new notes.
Well, we are all in this together.
Absolutely.
All right, so on Sunday, not so long ago, we saw a dip. And we always hear grid collapse and grid collapse. Thank God you are here. You've been in this industry for many, many years now. So even though you are from the distribution end, you should be able to help us paint a picture.
Yeah.
You know, when we hear grid collapse, what is that about, really?
Grid collapse, grid disturbance. What it simply means is that the grid, which is essentially the element that transports electricity after it has been generated, it's not having either enough electricity or too much of it to balance its ability to then send it to distribution companies. And that can happen if, for example, there are gas constraints, if you don't have enough gas, so it means the generating companies cannot generate enough. If you have too much, it strains the capacity of the grid to wheel it. Either way, it creates disturbance. And once there's disturbance, you begin to ramp down. The systems operator begins to call on distribution companies to run down. In other words, switch off certain areas so that you create, you do not allow for a total collapse. Now, beyond a certain threshold, if the amount of power coming in isn't enough, then the grid collapses. And
so either way, either high or low.
If it's too high or it's too low. So that's why what they do at all times is to ensure that there is a grid balance. Once that balance is not attained and there's a disturbance, I'm sure in some cases, I'm sure there are homes where you have power come on 10 minutes, it goes off, comes back 30 minutes, goes off. That's when there's that disturbance.
So it's not like somebody switching it off and on?
It's not as straightforward as switch on and off, but yes, it is just a way of ensuring that the grid does not collapse. So you just think about your generator, 60 kVA generator, then you put on so many appliances. If it goes beyond what that generator can, you know what goes and starts fluctuating, it starts going deep in and everything, and then you quickly go and switch off one or two gadgets, and then you now maintain some kind of stability. When you feel it can power it, the more you go back that way. So it's essentially the way it works. But I think what we should be looking at is that, why should this be happening? And it is happening because the gas companies that essentially supply power to the generating companies, because 80% of the power electricity we get today are from thermal plants. And those are your huge thermal plants you have all over the place. Egbin, Olorunshogo, all these big plants. They all depend on gas as their feedstock. But unfortunately, because of issues to do with gas pricing, poor infrastructure, gas to power infrastructure, because I think in our model for electricity, we didn't really think about gas to power. We were more interested in gas for export. That's why you don't hear complaints about the LNG exports. So now that we have those constraints, the gas companies do not feel encouraged to supply gas to the generating companies because they are being owed. Because they're being owed. And when that happens, the generating companies themselves have to ramp down. You have, like Egbe has 6 turbines, 4 are contracted to the national grid. And then there's gas constraint. They shut down 2 just to protect the plants. So that's the reason. So when people, what we need to understand it so that we can begin to tackle the fundamental issue of gas to power, because that's what holds the key. Now, I'm not saying there are no problems in the entire value chain. We can discuss those ones later. But this is the fundamental one. It needs to be dealt with.
Okay, so who is supposed to deal with this gas? Because I know that even recently, because of the Ukraine war, Europe is looking to countries like Nigeria for gas, this same gas.
This is the irony of our situation. We don't have any problem with our gas exports. All the gas infrastructure is built for export. You have all the big producing companies, they're the same ones, the big boys, the Shells, the ExxonMobils. They produce the gas, they take it to Soku, that's the gas gathering facility. It is piped to Bonny, and from there it is liquefied and then shipped abroad. We don't have that problem, and the government is earning good dividends from that, which is good, but that's one separate business. But then what about your gas for domestic use? Now, to encourage gas for export, for example, I told you about pricing. The price at which gas is given for export is far lower than what it is given for domestic consumption.
Lower?
Yes, because the government tries to regulate the price. They try to encourage export, but you must also begin to look at what you can do internally.
So is it a matter of pricing for domestic? Is it a matter of pricing or a matter of infrastructure?
Both. For example, gas prices are regulated. I think today it's about $3.80, benchmark with international pricing. The gas producers tell you that it costs them about $6.60. So they have absolutely no incentive to give it to you. So that's why I said those contracts are on a best endeavor basis. So they give it to you. So the government still takes it and therefore owes them. And this backlog is part of the reason from time to time.
Is this the $1 trillion debts that they talk about?
Naira, you mean?
Naira, yes.
Yeah, it's all rolled in because the generating companies too also have their own element of debt because they generate. You are meant to pay them for not just the raw power they generate, but for the capacity, because they also have a capacity to generate more than they are doing. But because of these constraints we're talking about, they can generate, but it cannot be taken by transmission. You're supposed to pay for both.
Is it possible to have a totally privatized power sector? From this gas to the generation, and then of course we already have the distribution, we don't even know what's going on.
Yeah, but no, let me say totally, as in let the government totally hands off. That can happen, but it will be over time. Because it's just like with your petroleum subsidy. You want to wind down slowly because the key to all of this is the tariff at the other end, which is what concerns the average consumer. So if you allow for market forces to determine pricing, those tariffs could go totally out of whack. So the idea of the government intervening by way of controlling the prices is to make sure the end user tariffs are manageable. But that brings the subsidy element into it. And we know in Nigeria, subsidy has not been well managed. And that is why when the privatization, the gradual privatization, which is the way to go, started, one of the conditions for the investment was that you would allow for cost-reflective tariffs.
Which we are still struggling
with. Which you are still struggling with, because that's what truly attracts investments. Because the investments you require in the energy sector is massive, really massive. And that money is not here. It's going to come from investors who see a clear path to recovering those investments. And one of those things is don't distort the market.
All right, Mr. Itomi, I have to tell you this, that a lot of Nigerians are still angry with you guys that you secretly increase the it's still a conversation that's ongoing. If you check on Twitter and every other place, that you secretly increase the tariff without their knowledge, and they just recharge their cards and discover that tariff.
I believe I apologized on behalf of the discos when the last time we spoke, because you did give the advice that if you are going to increase, the least you can do is just send out messages. And that point has been taken, and I hope going forward that will be done. But in terms of the fundamentals, to keep market confidence, to honor contracts, you must begin to move the market in the direction that it was originally conceived to go. And one of these is the correction, the price correction. And that is why I told you there are two models under the MITO for regulating tariffs. You have the major review, which is once every 5 years. Because based on representations from the discos and the public hearings and co, the regulator anticipates over a 5-year period where the tariffs will go. But in between, every 6 months, just to look at market realities, because of course you have foreign exchange fluctuations like me and you see, you have inflation, you have other things. Those adjustments are made. Because electricity, like with any other commodity, yields to market pressure. I mean, today you went to buy a cup of gari for 10 naira. Tomorrow you go, it's 15 and all that. You don't blame the woman. She's responding to the market pressure. So the principle is the same. But what you want to do is to ensure that market confidence is maintained so that investments continue to flow in. And why do we say that? Ultimately, when the investments come in, and the system corrects itself, there's competition. Competition always drives down prices. We saw that in telecoms. I always remind people when telecoms came to even get a handset, recall 200K, 50K. SIM cards was another story. Tariff, there was a time we were told, oh, you could not do per second billing, it had to be per minute and all sorts of things. But what did the regulator? There was pressure at the time from the public. No, don't allow. The regulator stood firm, stayed by the contract. And it was just like, look, you guys calm down. And what did that do? It brought in more investments. And as the big players came in, competition started. Today they beg you to come and get SIM card. They're giving you all sorts of offerings. That's where we'll be moving to. I can understand the impatience with electricity because it impacts directly on your happiness. I mean, once you don't have power, it just affects your mood and all that. So I guess that's why many consumers are not happy. But truth be told, we must stay the course, we must stay the path so that we can begin to move away from this subsidy regime. It's subsidies, whether it's power, whether it's petrol or whatever, that's brought us where we are. And look at your national debt, 77 trillion.
Yes.
I don't envy anybody who's coming into power after
Mr. Itomi, we're out of time, but we can't help but talk about the metering, because this is one way of assuring the consumers that you're actually just paying for what you consume. People talk of crazy bills and things like that. We've had maps. That's supposed to be a policy that's supposed to help spread metering, but we still have a lot of Nigerians and a lot of stories in the process of acquiring the metering.
Yes. The metering, I think, as I've mentioned to you before, it's what creates trust between the distribution companies and the consumer, and really must be given priority. And right from inception, the metering rollout has been steady. Many people will not understand it, but when the companies were initially privatized, information was very difficult to get. The system, the old NEPA, was manually driven. It was just difficult to get information. Nobody even knew what the metering gap was. They give you numbers, 12 million, 20 million, you don't even know. And so by the time most of this, as we're now seeing, the systems are being now automated, you're beginning to get that number. So there's aggressive metering going on, but it's just that the demand far outstrips the supply. But that's not an excuse for bad behavior. I mean, you shouldn't let customers go through a lot of hiccups, because there's been a lot of support for metering. And like you said, there are maps and so many other programs in place. But that will be a steady one, because if it's good news to the consumers, the regulator has put a cap on estimated bills. So it would be silly for a disco to rely on estimated bills instead of properly metering, because there's a limit. If you go beyond it, the consumer has a right to report you and you'll be sanctioned. So for even the discos, you don't need to beg them anymore. They want to actually meet our customers.
Well, Nigerians will ask if that's a system that brings about the sanction is actually effective.
It is. Just know your rights. Just know your rights and press for it.
All right, Mr. George Etomi, thank you so much for coming all the way to the studio this morning, Chairman, West Power and Gas. And we will hold you to your promise that you will communicate more with us as consumers.
I'm not in the distribution business, but I'll advise them. We'll advise them.
All right, thank you so much for your time this morning.
Pleasure.
Okay, so now we move from power to commodities, and it's AFEX time. Let's take a breather. We'll be back for that. You're welcome back. An increase of over 40% on the total turnover for AFEX Commodity Exchange for the week ended the 16th of January 2023. We have Eniola Akindele, analyst, market data and research with AFEX, joining us from our Abuja studio to give us details of trading on AFEX and the AFEX exchange for that week ended. Hi, good morning. Thank you so much for your time, Eniola.
Good morning. It's nice to be here.
So let's have details of the trading for the week ended the 16th of January.
Okay, thank you. For our last trading week, we saw a mixed performance across our key indicators. Our total turnover increased by 41% to close out at 3.7 billion naira. Our volumes traded was doubled to close out at 11.9 million. However, our number of deals declined by 24% to close out at 239 contracts. Across our key indicators, our commodity index, however, increased by 0.11% to close out at 476 basis points. However, our export index declined marginally by 0.41% to close out at 244 basis points. For the volumes traded on our exchange, we saw that maize and soybean account for over 75% of the total volumes traded. Across our commodity prices, soybean was the only gainer, gaining 3.20% to close out at 325 naira. Paddy rice declined by 1.08% to close out at 307 naira per kilogram. Also, cocoa declined by 1.88% to close out at 1,864 naira per kg. Maize declined by 2% to close out at 214 naira per kg. Also, sorghum declined by 2.5% to close out at 284 naira per kg, and also cashew declined by 3.18% to close out at 453 naira per kg, while the prices of our other commodity remain constant. To know more about us, kindly visit our website www.africanexchange.com, and to trade on our platform, kindly download our app ComX on Google Play Store and iOS Store.
All right, thank you so much, Eniola Akindele, analyst with market data and research with AFEX. Thank you for those details. I'll still stay with AFEX now. Let's look at food system trends and 2023 annual outlook. Joining us from our Abuja studio also is David Ibidapo, head market data and research with AFEX. Good morning, Mr. Ibidapo. Well, we do know that food security is one of a series of interconnected challenges, from the cost of living to energy crisis. Macroeconomic conditions are expected to remain poor, and that's because of the continued underperformance in agricultural sector. Let's look into 2023 now, especially in Nigeria, with the elections expected to present significant challenges with little change in trajectory of a nationwide insecurity. Mr. Bidakbo, the AFEX crop production report forecasts a generally low production level across commodities. What are the factors that have informed this?
Good morning, Ini. Thanks for having me today. Just like you said, some months back, we forecasted some level of decline in production levels across key commodities, and I would say key staples, right, like maize, paddy rice, and sorghum, averaging around 11% in terms of decline that we expect, right? So one of the major factors that actually drove this expectation are actually issues around the hike in fertilizer prices, which kind of induced some level of low fertilizer consumption across farmers. Then also we saw the climatic shock. We saw climate shock, right, where we saw the effect of flooding on a lot of farms, wiping out about 600,000 hectares, right, across like 30 states. And this was actually a big issue. And one of the major things we warned against is the fact that this can kind of induce some level of crisis, food crisis, right, coming into 2023, right? And if we look at this, you see that it's a big and major factor to consider when you look at the effect on average households, right? Because the big factor throughout last year and even this year as we are looking is inflation, and we all understand what high prices of commodities mean, or high price levels mean for the purchasing power of consumers, right? So it's actually a very big issue. I would think, though we saw inflation level kind of moderate a bit in the last NBS report, but we all understand that this is more of a base effect, right, than the actual reality, right? So we think on the back of the supply crunch that we may actually see this year, there will be some level of effect on household income levels, and this we believe is actually key, and we have to really look at it this year.
Yeah, so you mentioned some of those challenges. Flooding is one of it. Post-harvest loss is also a big one for Nigeria. Are there some solution, that's, even if it's in 2023, especially the issue of flooding, because the season is coming again, and we know the devastation that farmers, especially rice, faced in 2022. Are there things that can be done to curtail or manage the situation better?
Yeah, Ine. So we believe that to a very large extent, right, it all boils down to the level of investments that we make in the agricultural space, right? Are we intentional about controlling of putting some level of buffers around some of these shocks that we've actually seen, which may also happen this year, right? Based on some forecast by some international bodies, right? So are we intentional, right? Because in controlling controlling climate shock, right, we will start talking about investment in building some drought-resistant seeds, right? We are talking about also technology like greenhouse solutions, right, which can also help to kind of ameliorate the effect of climate change, right? And also when you talk about post-harvest losses, right, we are talking about investment infrastructures around storage facilities, right? We've not really seen a lot of much efforts in this line in the agricultural space, but at AFEX, one of the things we've ensured doing is to continuously and consistently ensure we provide that storage solution to control for post-harvest losses, right? Currently, we have over 134 warehouses across 28 states, right? And we understand that this is actually very important to kind of fix some of the challenges that are faced by farmers, because when farmers plant and they produce, the question is, do they have where to store these commodities, right? And that's why the risk of post-harvest loss in Nigeria is actually very high. And if you look at our absorption capacity in Nigeria as a whole, right, we are talking about the ability to absorb just 5 to 7% of what is produced annually, right? That's very, very abysmal. That's really very small. So we need to be intentional about investment in the agricultural space.
And the war has been going on. It's going to be a year in, I think, a couple of weeks. The war going on in Ukraine. And we know that these are major producers of some agricultural wheat, fertilizer, and all of that. And we have felt the impact. Have we been able to cover up with that shortage of supply from Ukraine and Russia?
Truth be told, right, the Russia-Ukraine war really poses a major challenge this year also, right, because we've not seen the war kind of temper in a bit, right? Now, if this war continues to intensify, there is a major threat, right? Because the truth of the matter is we still largely depend on fertilizer imports, especially the components, because most of our farmers use more of NPKs, right? So, and what we typically do in the country is more of blending rather than producing, right? Now, so we think, and we also understand, we saw the pass-through also in wheat as a commodity, because Nigeria currently produces just 1% of what we consume in terms of wheat, right? So and these countries are actually big producers of these commodities. Now, the truth of the matter is it will take time, right, to start building some level of some level of buffer, right, because we need to be intentional about reducing our resilience on the international space in terms of having to get input and also import some of these commodities that we really need or use in the domestic space, right? And it all boils down into how do we support production levels, especially for wheat as a commodity, right? How do we start thinking around producing our own fertilizer, or even start thinking of alternative sources for procuring these fertilizers into the country? Because if the price of fertilizer continues to increase on the back of this war, right, we may see a reduction in consumption level of fertilizer, which also finally affect output levels this year.
All right, just very briefly now, what other factors do you see affecting commodities market this year? Maybe just list them because we're out of time.
Okay, yeah, I think the biggest factor is the fact that the global economy is actually slowing down. But however, there's some risk to this because normally when the global economy is slowing down, we're saying demand levels can be slow and kind of affect commodity prices that's commodity prices declining, right? But the risk to this is also the fact that the Russia-Ukraine crisis is still ongoing, which will still further affect supply, which will further disrupt supply levels. We still have the El Nino effect, right, which is forecasted to continue for a third consecutive year, right? Some international bodies in the US have forecasted that in the African region we will see a lot of drought, right? And why in Australia and Asia region high rainfall, right, which could lead to flooding. Right, and we also think, very importantly, right, the outcome of this election would also pose some level of outlook for the agricultural space, because the past administration were able to focus a lot on agriculture. So, question is, will the next administration actually focus on agriculture? What will be the effect of all of these?
All right, David,
I think more of these would actually be spoken about in our launch, in the report's launch.
All right, we'll be looking forward to that report from AFEX to give us more of those factors. Thank you so much, David Widako, Head Market Data and Research with AFEX.
Thank you, Eunice. It's nice to be here.
Let's take a breather. We'll be back for the markets. Now the market now, equities, well, Will is not here, so it falls on me. So let's head to the markets now, starting with equities. And happy to say that even though at intraday we had the all-share index at 0.70%, it dropped slightly to 0.67% at the close of trade, still doing good. We see that most of those banking stocks, they recovered. I remember 2 days ago, that's almost all the banking stocks, the major, the tier 1 and the tier 2, they dropped. The profit taking just pushed them down, but they recovered yesterday, and that's why we saw that. So looking at the activity now, mixed from going from 5,000, that's the deals, to 3,680. Value 4.44 billion in the green, as well as volume. And let's look at the others now, the sectors. Just insurance was in the red yesterday. Remember the banking, they gained, as well as consumers, industrial goods also, oil and gas. They've been sustaining this positive sentiment for a while. Now we go to the fixed income market. This market, of course, is really looking forward to that MPC that's taking place next week on Monday and Tuesday. And what we see for the federal government bonds was 24 deals yesterday, valued at 13.30%. Looking at the others now, the treasury bills also had just one. But I believe we have Ifeoma Onyejekwe now, fixed income dealer with UBA, to give us her perspective. Hi, Ifeoma. Good morning, and thank you for your time this morning.
Good morning, Ini. Thank you for having me.
Great, Ifeoma. So how's the market doing? Yesterday was up, down, in the middle, because I know a lot of investors are actually looking out for next week's meeting, especially with inflation number that tapered.
Yes, so for now, the market has been very awash with liquidity. So we've seen bullish interest, especially on the buying, on the T-bills section, and then traders were really expectant for the issuance of the Q1 bond calendar, which was issued earlier this week. So we are seeing that the federal government plans to borrow about 400 billion in Q1, and the auction is on the 30th of January. So everyone is looking forward to that auction. But like you said, the MPC, we're also looking forward to the MPC, and market expectation is that the MPC would increase rates just as they've done. They did it 4 consecutive times last year, and it is likely as a reaction to inflation that they also increase rates. So market is really, expectant, waiting for the meeting as well as the bond auction by the end of the month.
Yeah, so we've heard, we see the more than 11 trillion naira deficit in the budget, and we've heard the federal government say most of that will come from domestic borrowing. So I guess that has gotten investors excited. Do we see investors positioning for these bonds and auctions that will give them an opportunity, to make some money from deficits in the budget?
Oh, yes, definitely. But mostly domestic investors. For now, we've seen international investors shy away from our markets, pending the results of the presidential election in February. Some that we've spoken to have even left our market totally. So pending the result of the presidential election, that is when we'd likely see a return. But for now, yes, domestic investors are very excited, and it is likely that rates increase, especially on the longer tenor. For now, we have 4 bonds on issue. Last year in previous auctions has been 3 bonds. So yes, domestic investors are poised to really show out at this auction, and also we expect an increase in rates all across tenors.
Can we do without the foreign investors? Are we doing okay with domestic investors, or do we desperately need them?
Well, it would depend on your definition of okay. I doubt if the domestic investors will be able to fill up all the buckets of federal government needs. So yes, international investors are also important in their own right. So I don't think it's right that we can do without them completely. But yes, we're doing relatively okay.
All right, Ifeoma Onyejekwe, thank you so much. We'll certainly be looking forward to the decision on Tuesday and see how the investors will react to that. And of course, those investing opportunities that are available with the deficit that we see in the budget. Thank you so much, and have a great trading day today.
Thank you very much for having me.
Okay, so from one market to the other, while investors in the money market are looking forward to that bond auction and, of course, the decision of the MPC to see where it will move rates to make the market more attractive to them. I think, okay, we should have the crypto here now because Ladi is coming in. And Ladi, you're still neutral. Can you please make up your mind?
I
Can
cannot
you
make up
your
my
mind,
yet,
laddie? You've been neutral for days now.
Yeah, it's going to take time. I need to absorb, all those macroeconomic headwinds.
Money,
know what direction.
Time equates to money.
Yeah.
And time doesn't wait for anyone, so you don't have time.
And
you need to make up your mind.
Yeah, investors all over in this market are looking for direction. Is this the bottom? Is this the rally we've been waiting for? So there's still that pessimism there, cautious.
Well, you guys have to move.
So that's why
you guys have to move away from here in a very short time.
It looks like we'll be here for just a little bit. 52 points.
Okay.
Bitcoin struggling there to keep up. To try and break some of those major resistance we've seen, with the price there, 21,450, 21,500.
Congratulations for sustaining the 20,000. I have to say that.
Exactly. So let's thank the bulls. The bulls have held it strong in this market, even though we're seeing, neutral sentiment in the market. Let's look at the market cap this morning there. We see it $997 billion, just a little bit. We're still very close to that 1 trillion mark. Investors are expecting that 1 trillion mark will be broken sometime, this week. Volume traded, that's down 3.13%. Bitcoin dominance sitting at 41.15%. Let's look at the price of Bitcoin this morning, $21,283. It did mention that it's facing a lot of sell pressure from the bears at major resistances at $21,450 and the 21,500 level. So once we break that 21,450, next will be 21,500. But if we stay below that, there might be some downside action coming for Bitcoin. Price of Ethereum, they're down 0.18%, $1,583. See Ethereum holding on strong. Then break below that 1-2 level for the longest time. Volume traded $7.44 billion. We've seen much volume most mornings this period. Let's look at the top alts by market cap. Now we see it's mixed sentiment. EMB still staying above that $300 level, down 0.19%. We see Cardano 35 cents. It's up 0.54%. Matic crossed that $1 level, staying above it, but might correct lower due to profit taking. XRP still at 38 cents, not breaking above 40 cents, even though we're seeing a lot of action with most altcoins at this time. XRP trying to kind of being a laggard, at this time. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Good morning.
Hello, Laddie. Happy Wednesday.
Happy Wednesday, and great to talk to you again. Olumide, a lot has happened, since the last time we spoke. I remember Bitcoin was still struggling at $16,500, but now over $5,000 added in just the first half, of January. How are you seeing it?
Well, I think it's been a turnaround in the crypto market. First of all, you need to look at the narrative that Bitcoin was on a 14-day winning streak. Its market value has risen beyond big global brands like Tesla, JP Morgan. And that pretty much tells you at the level of confidence coming back in the market. You could see the Greek Fear Index moving moderately at a fair value. Also, in addition, you could see that short sellers betting against crypto markets rise have suffered immensely in the month of January. Data suggested that about 600 million worth of positions were liquidated for those betting against Bitcoin and other altcoins. So interesting signs in the crypto market, despite the fact that the downside risks still remain. And also, you need to look at it that Bitcoin is at 4-month high. That pretty much tells you that the FTX systemic danger across the market has resided. But you still need to look at forward data coming, US retail data will release shortly. And also that will give us insight on how the US Fed might take in, because the US Fed still holds the odds on how the good direction will be in the global economy. But sentiment, interestingly, across the crypto market seems to be on the high. The same meme coins, Dodge, Ibrahim, posting decent gains and telling you that we are seeing the ecosystem getting a bit more exciting. But like I said, this market is very volatile. It just takes 10% back for Bitcoin to fall back to the bear market. But right now, the bulls are having the day, Laddie.
Yeah, the bulls are having fun. And, Olumide, I did remember some time, the last bull run, we did have that meme coin, season, but we're starting to see meme coins, creeping up again. First, it was that Solana meme coin, that bonk, that, gave a lot of gains, to investors that got in early. And we've had some other ones, spring up. Now we're seeing Shiba Inu doing well this morning. Is it meme coin season?
It's still very early to call that, but you need to understand why meme coins are doing impressively well in recent time. In the era of social media and strong community exposure, it has really helped coins that have such fundamentals bring up, despite their utility, questionability. And also, Elon Musk is a fan of Dogecoin, and you understand the impact Elon has in the crypto market. That also gives some sentiment towards it. But it's very tricky, knowing fully well that this coin, we don't have much utility to play around. But based on the strong community it has, and the fact that it has sometimes considered Doge or some form of payment, really triggered enthusiasm across the space. Well, a great sign to watch in the coming weeks is how Bitcoin, the crypto market, will break the $1 trillion mark. Because if that happens, I think it's fair to say the bulls have survived the rout we saw in November, December, Ladi.
And definitely, it seems most investors are always late to that, meme coin rally. You see some already, made incredible gains. You buy late, and next thing, the price goes down. You have to hold that back for the longest time. But, it's 2023. What other season, are we expecting, for that's going to rally, this market?
For me, I think the metaverse. I think a lot of people are undermining utility coming from the metaverse. We've seen so much investment from big brands, particularly Meta, the parent company of Facebook. I think that also play, and I also see that coming in form of the NFTs. Also, despite the concern that we've seen NFTs trading volumes plummeting to record lows, I think the utility still comes in handy, and I think with brands coming in, they're just waiting for the regulation from different authorities. Regulation definitely would tailor how these assets would be used. Then, the outcome of XRP at the US court also would determine the longevity of many of these altcoins. So that is a wait and see approach this quarter, particularly
wait and see
the long-term direction of the crypto market.
All right, we'll keep watching, but we know it's the market is neutral now, trying to look for direction at this time. But thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you.
All right, let's look at the top 5 gainers now. We'll see, a meme coin, Shiba Inu there. That's topping the counter, up 20.45%. Seeing some buying action with those meme coins. There's CSPR, Casper there, that's up 14.83%. And we see Holochain, less than a cent there, up 5.67%. We see ICP there, Internet Computer. That's been on a downtrend, for the longest time since it was launched. Now let's look at the top 5. Let's see Mana there, topping that counter, down 6.46%. It did have a rally, recently, and we see Optimism. That's had a big run, this season. There was trading less than $1 at some point. Now $1.77. Trying to break that $2 level. We're seeing profit taking that down 3.89%. So it seems like the meme coins are taking the shine, at this time. But meme coins are so risky.
Well, if you can't take a risk, you can't make the money.
Yeah, I guess. Yeah.
Thank you so much, Ladi.
Thank you.
See you at 1:30.
All right.
All right. So that's it on the program. Do remember that we're asking for your new Naira experience. Send it to businessmorning@channelstv.com, and I'll see you at 10 p.m. during the stock market report. I hope to report the bulls today again. Looking forward to that. But for now, do have a great day. Make some money, and we'll see you again tomorrow.